What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to make a full breakdown of today is CHF JPY. Now, the reason for which I want to make a full breakdown of CHF JPY is because the pair next week has very good potential for a good trading opportunity on it. So obviously I want to share the full situation that we have on the pair and how we can be looking to capitalize on the next move. Now, first I will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is basically what hedge funds and the big speculators in the market are doing, and by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probabilities for a nice opportunity. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we can see that all this area is extremely strong resistance. In fact, from here, the market had started all this move to the downside. Again, the market here tested and rejected its zone to the downside. Again, here, tested and rejected. Again, here, tested and rejected. And we can see that as we are speaking, the market is again rejecting this extremely strong monthly resistance zone to the downside. So here on the monthly, we have a very strong layer of resistance, which the market has been testing multiple times and rejecting to the downside. So here on the monthly, the situation is quite clear. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see that this area was extremely strong resistance also in the past. From here, the market started all this move to the downside. Again, here tested and rejected. Again, here tested and rejected. Again, here tested and rejected to the upside. What we can also see is that the market has created a deceleration in approaching this resistance area. In fact, we can see how the market the first time approached this area with a very strong bullish momentum. However, what happened then is that the momentum got slower, slower and slower, and now we have seen the first push to the downside after this big manipulation to the upside that the market had provided with this candle. So at the moment, everything is indicating for a nice move to the downside. Specifically, if we look a little bit closer, what we can see is that the market has just provided this candle here. Now, when you see a candle like this with a red body and a very long wick, what you actually expect is for the next candle to fill in this wick. Now, why is that the case? Because when you see a candle with a red body and a wick, which is at least half of the, or basically same size of the body. So if you have a red candle, which has a wick, which is the same size as the body, or even better, it is bigger than the body, then basically what you expect is for the next candle to fill in the wick. Now, if you're asking yourself, okay, but why is that the case? Because if you have a candle like this on the weekly, what you actually have on the lower time frames, so for example on the daily, is an impulse and correction, in which the correction that we have on the daily is exactly the wick that we can see here on the weekly time frame. And generally speaking, after an impulse and a correction, you do expect the continuation to the downside. So the wick that we have here on the weekly should be filled in with the continuation to the downside that we expect from a daily perspective. So overall, we can definitely expect more continuation to the downside and for the market to fill in this wick. Going down on the daily time frame, what do we have? Now here on the daily, I had spoken about CHF JPY a few times in the past. I spoke about CHF JPY after this W formation. I made a full breakdown explaining all the reasons for which we expected the market to provide a move to the downside to go and complete the pattern at the neckline. And in fact, that is exactly what the market did. Then we had the creation of this M pattern here, and with the very last analysis that I made on CHF JPY, I explained all the reasons for which from here we expected the market to provide this move to the upside, and in fact, that is exactly what the market did. And by the way, I will link this previous analysis in description, so you can go and check it out for further reference and more free education. You find everything linked below. Any questions or requests for the next videos, make sure that you leave them down in the comment section below. Also, make sure that you smash that like button and subscribe. However, at the moment, what do we have and how we can be looking for the next potential opportunity on this pair? Now here on the daily, what we have is a very strong impulse to the downside. Now in all this impulse, there is one candle which is not related to the move, which is exactly this green candle here, meaning that this area is actually quite strong previous support, which is now term resistance. Now, generally speaking, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we take our Fibonacci from the high to the low of this impulse, what we can see is that we have a perfect 0.786 Fibonacci retracement lining up quite perfectly with this previous support, term resistance, creating a confluence of resistance at this area from which we definitely expect the market to provide a rejection to the downside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds and the big speculators in the market are doing, so the big players in the market are doing, what we can see is that with the last reports, the net positions on the CHF have been decreasing, meaning that the positioning from an institutional perspective has been shifting to the negative side. We went from having a 14K net positions all the way down to having 8.3K net positions, with 3K longs closed with the last report and also 3.3K longs closed with the previous report as well. And currently, what we have on the CHF is a short exposure which is basically increasing and a long exposure which is clearly decreasing. So we can expect some CHF weakness and for the market to create this continuation to the downside. If we go and see what we have on the JPY, we can see that overall, finally, with the last report, net positions have increased from 34.6K to 37K, with 6K longs getting added. So finally, we see the start of, again, some adding of longs on the JPY, because clearly, if we look at the long term, we can see how the net positions were continuously decreasing. And in fact, we have seen the JPY getting weaker across all pairs in the market. So clearly, finally, we see some strength as well on the JPY. And if with the new report that will come out today, because keep in mind that today we have a new report coming out. So if with the new report that will come out today, we will see more shorts added on the CHF and more longs added on the JPY, that would be great for the continuation to the downside on CHF JPY next week. So how we will be approaching this potential opportunity with students. Now, as usual, the monthly, weekly, and the daily timeframes, those are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. So inside of here, what we will be doing with students is monitoring price action from a 4-hour perspective, and we will be waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. Now, why on the 4 hours? Because monthly, weekly, and daily, those are the best time frames for the direction of the market, combined with the COT data. But the best time frame when it comes to confirmations and entries is the 4 hours. So inside of here, we will be monitoring price action with students from a 4-hour perspective. And as soon as the market will provide to us one of our valid entries with students, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete this impulse correction and impulse pattern to the downside and create a lower low. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering all your questions every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.